Welcome back, traders. It's Jomo here, and today we're going to talk about something that isn't talked about quite often. And yes, it is how you can eat a cake and leave it full, right? In a sense, why there is that verb in English saying you can't have your cake and eat it too, but I'm saying you can have your cake and eat it too. And how do you do that? With low risk entries. Look, everybody, if you like what I had to say, please like, subscribe right now to the channel, because I give free content and sometimes I give free trades in real time to you on YouTube. So you don't want to miss that. Click that subscribe, put that bell notification, and make sure to leave a comment in the section below. Tell me if I make sense right now about low risk entries. If you can eat your cake and leave it full, comment right now for me and for the algorithm. So low risk entries, what does this mean and how can I eat the cake and leave it full, right? Now, let's paint some scenarios, okay? Beautiful, you know how I love painting. This is the cake, you know, you have slices and you know everything. And if you eat a slice of the cake, right, it's gone, right, supposedly. So what people try to say over here is that if you eat, right, that you can't eat it and leave it full. In trading, all right, if you not to trading, so if you want a reward, right, a reward, you can't have it without big risk, right? That's what they're trying to say, right? You can't have big rewards without big risk. So that for me was what means that you can't eat the cake and leave it full. And we're going to talk about it right now, how you can do it. And of course, I already said the answer. The answer is with low risk entries. Now, let's see if I can, is this eraser? No, this is not an eraser. Let's see, this is an eraser. All right, yeah, look at this erasing, perfect. Look, how do you do that, right? What's low risk entries? Let's try and paint what low risk entries are, and I will help you understand it better. So let's get back to me drawing stuff. So, you know, if you watch me for a while, and again, click that like button for me, subscribe and comment for me. So you know that we like, first of all, we like, these are, let's say this is an asset, boom. We like an asset to do an up move first. It needs to do an up move over at least 50%, preferably more than 100 in less than 30 days, right? Then I wanted to start a base, creating a VCP pattern, and then have a continuation pattern. That's how, and then we enter over here in this X, that's where we enter. So that is what I want to see, all right? I want to have an asset going sideways, then boom, push of momentum, then it gets halts, of course, digestional profits, then you build a base, and then you break out of the base, all right? That's what we want to do. Now, let's try to paint it a bit better so you can remember it even better. So we have sideways action of an asset, then we have a push upwards of an asset, let's say more than 50% or even more than 100% in less than 30 days. Then you have a sort of a correction, which is a base with a volatility contraction pattern over here. It's creating maybe cup with handle, and then it breaks out of this line, right? This last breakout, boom, we break out of it over here. Now this should be painted better, but if we broke out of here, this is called a pivot, right? This is the last iteration. You see those waves that I'm talking about, this VCP, the volatility contraction. So the last wave, the last iteration, doesn't matter if it's in the lows of the base or in the highs of the base, needs to be, all right, less, right? Let's W for wave. It needs to be less than 10% risk, right? Preferably even less than 5%. Then what happens is that once an asset breaks out, right, breaks out just like this and continues, it's a continuation movement. You're piggybacking upon that momentum. Something is moving, all right, and you know it has momentum. You piggyback on it, you buy the breakout, and you put a stop loss, right? The stop loss should be below the pivot line. Now, as I said, the pivot line needs to be single digit, less than 10%, preferably less than 5%. Now, what does that do to us? I will tell you, that's a low risk entry. Because let's say you take 20% of your capital, you have $100,000, right? You have 100,000, 100K, right? You have 100K, you put 20K, right? Which is 20% in a trade, all right? 20K in a trade. And you lose, let's say 10%, all right? You lose, right? 10%, minus 10%, you lose 2K, right? That's $2,000 lost. 2,000 out of $100,000 is 2%. right? Now, even that is quite on the higher end of losing. Usually you won't lose more than 1%, because if it's a 5% risk, a 5% pivot on a $20,000, that's actually only 1K lost. That will be 5% only. Imagine how many times you need to lose in order to really blow out your account. It won't even happen. Now, the beauty of this is, all right, the beauty of this is, do you think I can go down? The beauty of this is that this doesn't have a way to go down. I need to better learn how to do it. By the way, please, again, like and comment in the section below. Tell me if this makes sense, and if you have any questions, just comment in the section below now, sir. Don't forget, ma'am. Comment for me, all right? We need to have those comments. We need to get this spread out, right? So what this means is that every time you take a hit, right? Let's say you take 1%, and then you take 2%, right? And then you take 1%. So you took 4%. So that's a total of 4%, right? Of your capital. That's $4,000. What's this? Remove it. 4,000. However, the one time you do continue and make gains, right, you will take a 30 or 40%, all right? So let's, again, from 100K, all right, you took the 20K and you made 40%. 40% of 20K, that's 8K. You made 8K on one trade because you took it at 40%. So even though you lost 3 times, all right, then on the one time you did win, all right, these are all losers. On the one time you did win, you made 8K. So 8K minus the 4K leaves 4K profit after 4 trades, right? 4K profits, sorry about this, 4K profits after 4 trades. Do it again and again and again, all right? And you make each month maybe 12, maybe 15, maybe $8,000 a month. You make 8 to 15, and sometimes you make 20, 25% of your account in 1 month. Multiply it by 12 months, you make 100%, 150%, 80%. You know that 5% of your capital each month compounded during 12 months is 88%. I will say this again, 5%, all right, each month compounded for 12 months equals 88%, 88% of your account in a year. Only 5%. That's mind-boggling. And that is why low risk entries does mean that you can have your cake and eat it too. That's basically what it means. Low risk entries, know where to put your stop. Know, of course, to take the momentum and then let it ride the breakouts. You'll probably be right between 35 to 40 to 50% of the time, maybe 55 in bull markets, maybe 60. So overall, you'll be right 40 to 45% of the time if you take bull and bear markets all together. If you take, all right, for every $1 you lose, all right, let's say for every $1 you lose, you make $4, you will make a killing. You will make a killing. You will have your cake, eat it too, and it will stay full, and it will double and triple actually. You will double and triple your cake while eating it. Isn't it fantastic? Now, I know it sounds easy in theory. No, it won't be easy, but stick to the principles, learn how to do this again and again, and you will see. Over time, you will learn how to extract money out of the market again and again and again. And that is how you become a consistent, successful trader, money-making machine. All right, everybody, hope you liked what I had to say. Remember, like, subscribe, leave that comment, bell notification, and if you really want to support us and understand what we do, join our trading service, all right? For less, all right, than a shirt a month, you can join our trading service, get signals, understand how we trade, get these types of videos on a daily basis, all right? Because I talk daily to our traders, right? Again, you want this, you want to invest, click on the link in the description or in the first comment section, and boom, join us to make money over time. All right, I teach how to fish and I give fishes. I do the heavy lifting for you. All right, everyone, hope you loved what I had to say. Until next time, no edge, no trade. Cheers, everybody.